Good morning. Today is Monday, July the 3rd, and this is the first business day for the month of July. And this is going to be a brand new start. I'm very excited about the new development that may happen in this new month itself. Now, the time right now in Singapore is 11:03 in the morning, and let's go back and take a look at what happened on Wall Street over the weekend itself. On Friday, we saw a bump up in US equity prices, largely on the back of a upgrade in the GDP for Q1 of 2023. When the first estimate came in, it was at 1.1%. So subsequent revision saw the GDP bump up to 1.3%. And on Friday, we saw a massive bump up in the GDP. The final revision is at 2%. So this is definitely a good news, meaning to say the US economy looking good. And as a result, US equity prices has largely rebounded. And we saw the Dow Jones itself as trading at 34,467.35 on Friday before it closed back at 34,400. Now, remember, today is going to be only half a day of trading because this is the day before the Independence Day holiday, which is tomorrow. So today is the pre-holiday holiday. So just be aware that there's going to be very thin liquidity going into the market today. And of course, we also have Canada celebrating their Canadian Day, which is their national day. So by and large, liquidity largely will be affected from today until tomorrow, and the liquidity will only flow back on Wednesday and midweek. So this is the condition in which we're operating. So be very careful when a market has very little liquidity. It tends to have wild swing. So do watch out for eventuality. Anyway, the Dow Jones at a price of 34,467.35 has basically traded into my area where I think the seller may actually come up en masse. The level is 34,170 to 34,712. This is the level of vulnerability because it also technically offers a very low risk, high reward setup as far as I'm concerned, because if the market do come down from here, there's got a lot to catch up on. Okay, so do watch out for such an eventuality. Now, over in the S&P 500, we also saw a bump up into a new high for the year at 4,458.5, and this is definitely a new high for the year. And again, the market is fast approaching what I would consider to be a low risk, high reward setup coming soon as the market bumps up even higher. The level to watch will be 4,512 to 4,537.3. That's in my opinion, the juiciest level to go into a counter trend trade. So do watch out for a reversal signal happening within their bracket of prices. And of course, Nasdaq is looking a little bit vulnerable in my opinion because the bump up from the most recent low at 14,687 unfolds in a three-wave pattern to 15,231.75 on Friday, and this is just a whisker away from the ideal selling price of 15,241 to 15,327. So if this market can actually be kept around this level, it offers a great setup for doing counter trend. So at a bare minimum, I think the market bottom here could be somewhere around 14,520. So if you're looking to do counter trend trade, and if you have the stomach to do counter trend trade, this could be a looking up to be a great setup for me. Okay, and then in Asia itself, we saw that the Nikkei itself is now challenging the year's high at 33,772.9 with a high so far. We are only at half a day session at 33,738.3. Now, this is on the back of a very positive update in the Tankang Large Manufacturing Index, which basically trying to measure how healthy is the manufacturing sector in Japan. The market was expecting a number of 3. It came in a strong number of 5. So that is definitely giving a shot in the arm for Japanese equities as the Japanese economy seems to be finding its feet. So this laid the groundwork for further escalation in the price of the Nikkei itself. Immediate target is about 35,285. So do watch out for a rally towards this level. And if the Wall Street itself started to tittle and fall over, it may take the Nikkei along for the ride. Over in Hong Kong itself, we see a bit of a run-up in prices in the Hang Seng Index. This comes on the back of a dip into the bracket of prices, which I have highlighted for quite a while, that I think the buyers may re-emerge. The level is 18,000 to 18,850. 850. So the high traded so far this morning at mid time is at 19,242. So this is definitely looking up to be a very good setup for Hong Kong equities. It may actually be able to rally higher to challenge the 20,155. If it can break above this level, it has a very high chance of doing a large degree three-wave rebound into the 20,800 to 21,400 range. So do look out for that possibility, although the market basically is still very much in a bear market. So this rebound is actually most welcome. For the mainland equity index, I'm checking the Shanghai Composite Index. I have always been sharing the CSI 300, but I think the Shanghai Composite Index do give us a different bit of a different perspective here. Here we can see that the Shanghai Composite Index bottoms out at 3,144.39 and is currently trading on the upside at 3,231, and it does look strong. And if this continues beyond 3,276, then it has a very good chance of gunning for 3,370 to 3,450 levels. So this rally here looks really, really good. Okay. And then in the energy markets, we see that crude oil continues to hold its ground. Last week, we see a bit of a struggle, but eventually the WTI crude oil broke above the $70 to trade to $71.01, and is currently trading at $70.58 this morning. And this market does have the potential to go up beyond the $72.68 to go. Perhaps my target is the $72.90 to $74.30 thereabout. Over in precious metal market, we see a bit of a reversal. Now, if I show you the daily time frame, this will give you the confidence that the market may be turning around, because last week itself on Thursday, we saw a break of the 1900 levels, which is a level very much watched by most traders, because it's a nice, juicy, round number. So for those who have actually gone long before the break or below 1900, that must be a bit of a misgiving. Market went up to as low as 1,893, and before it stabilized. Now, if you have been long above 1,900, you will logically place your stop below this level, and if you do, you'll be taken out. And for those who have been waiting for a breakout trade, because 1900 has been a very much watched level, and if you are enticed to sell below 1900, now you are caught, because currently the market is trading at $1,915 thereabout. This means that the bear trap has been sprung. So there is very high likelihood that we have turned around in the gold prices, and I'm looking a little bit more optimistic than normal, although I would love to buy at even lower prices, but I will take it for what the market is giving me right now. So if the market can sustain above $1,940, I think it's on the way up to challenge the $1,980 at the minimum. Okay. Over in the silver market, we see a little bit more bullish signs. The markets basically bottoms out at $22.28 and could potentially unfold in a three-wave corrective rally to the bare minimum of $23.27 to $23.50 thereabout. So if this is just a simple three-way, we could see further losses in the weeks ahead. But for now, it looks strong. Okay. And over in the currency market, we see that the dollar has come off a more quite an interesting high at 103.23. The market did not quite get into my ideal sell range of 103.26 to 103.57, but this was close enough, because at the end of the move to 103.23, we have a reversal signal in the form of a shooting star, and this is followed by a sharp drop in the dollar index. This means the market has completed its three-wave rally and is getting ready to trade to the downside and to possibly challenge the 101.49 levels and perhaps even lower. So this is working out to be a sell opportunity for those who wants to get on this boat itself. Do a simple 50% retracement. If you can get into this level, I think it offers you a selling opportunity here, and that level is 102.86 to 102.95. So if you can get into this bracket of prices, if the market do rebound, I think there is going to be a bit of a downside potential here to catch. Obviously, if the dollar is going to come down, the other currency may actually be motivated to go higher. But by and large, in the euro dollar setup here, although I've seen the three-wave pullback here, but this three-wave pullback did not quite hit equality levels. So I'm still holding out the hope that market will do another dip below 108.35. ideally to 107.70 to 108.10 levels to for me to actually anchor in a buy. But I'm not looking to buy the euro dollars because the fundamentals does not look great to me. Okay. On the other hand, sterling looks like a better buy. Sterling has actually bottomed out in a three-wave decline to 125.90 and rebound back strongly to 127.30 so far. And if we do get a bit of a pullback later in the afternoon or throughout the day itself to 126.40 to 126.60, I think that would be a great level to position a long if you have not already gone long. And the target is for a short at 128.50 with the potential to break this level and hits towards 130. Okay, this is the long-term target for me. 130 is the target that I have think it may actually be able to achieve. Over in the over in the Aussie, it's a bit of a mixed bag. The market did bounce within this range of prices at 0.6550 to 0.6630, but the rebound is still at this moment very tentative. The high traded so far is 0.6670 thereabout. Not sure which way it will go, but I tend to want to consider this as a buying opportunity. But by and large, it doesn't offer me a very clear-cut setup here. Over in dollar Canadian, the dollar Canadian looks like it may actually go higher because the rebound from 131.16 looks to be very, very constructive, and the high traded so far is 132.85. And if you not have already managed to buy at 132 range, the market may actually be a good level to watch here. Okay, if you are looking to buy, the level to watch will be 132 even to 132.20. It's a very, very small 20 pip range. If you can get in on this price range, then the potential is for a move back to 133.75 to 134.15. Dollar yen looks to be very, very interesting. The top at 145.05 traded on Friday may signal possibly the top as the market goes into 145 to 150 yen range. The market is actually quite nervous of a potential BOJ intervention. That means the Bank of Japan may come into the market to actually dump the dollar to buy the yen, because the yen has fallen something like 16% against the dollar so far this year, and it has fallen even deeper against the euro to a 15-year low. So obviously the Bank of Japan and Japanese officials are concerned at the rapid rate of descent for the yen itself. So at some point they may want to come in to support the yen, and this is actually a great opportunity to see if you can anchor in a short. Right now it's very, very tentative. If you are speculative and say, okay, maybe 145 is the top of this range here, maybe you want to sell, and the current price in which is trading at 144.65 does offer you the opportunity, because in my opinion here, we have a minor dip over the weekend, and now the market has bounced back into this very small range of prices, 144.65 to 144.75, which offers us a very, very low risk, high reward setup. If we are right, if the market do fall from here, there's a lot of room downstairs, okay, especially if it breaks below this near-term support line here. Okay, do watch out for a massive move in dollar yen. And then of course we are looking at a Bitcoin itself. Bitcoin has stabilized more or less, but not before it dipped into 29,500 on Saturday, on Friday. And this dip back actually fulfilled a three-way pullback. And this bracket of prices is where I was watching to buy. And now the market has gone into this bracket and has rebound. Once the market's clear 31,460 levels, it is on the way to at least minimum 33,000. Okay, so do watch out for extended run in the Bitcoin itself. This is all I have for you for the beginning of the week itself. Hopefully we will get better activity as the weeks rolls on. In the meantime, you take care, and I'll come back to you with another update tomorrow. Bye bye. Take care.